Some people love their job so much they want to work forever. But truth be told, the vast majority of us would like to hang up our work hats at some point and be able to relax next to the people we love. Life is short, and we don't want to be working. Life is short, and we don't want to be working until we draw our last breath. Unfortunately, there's some bad news. You might never be able to retire. In fact, millions of middle-class Americans will never get that chance, and in today's video, we've brought you many reasons that show you why. But before moving on, please give us your support by leaving a thumbs up, subscribing to our channel so you don't miss our upcoming lists. Without further ado, here are 15 brutally honest reasons why the middle class will never get to retire. 1. We are not saving enough. A new Bankrate survey showed that 25% of Americans don't have any savings. We've heard time and time again that having a financial cushion is essential if you want to retire. At any moment, we can be struck by an emergency expense or a job loss. So having a financial safety net should be in everyone's best interest. However, 1 in 4 Americans are not saving anything, according to the survey. Almost half of the respondents, 46%, said the reason they're not saving is because of the high cost of living, and around 20% say they can't save any money because they earn ultra-low wages. 2. Companies aren't giving raises anymore. Nowadays, employers prefer to offer bonuses instead of raises. The truth is that they're also suffering from the compounding effects of rising inflation and higher operational costs, so they've been cutting expenses wherever they can. Raises can actually offer more financial stability to workers, given that they usually match the cost of living increase seen each year. In June, average hourly earnings rose 5.2%, which would be considerable if we didn't have a 8.5% inflation. That actually means our wages have shrunk by 3.3%. A report released by the Wall Street Journal highlighted that as more and more employers are inclined to give bonuses instead of raises as a way to reduce costs, American wages have remained stagnant for 4 consecutive decades. 3. The majority of employers don't offer retirement plans. A Transamerica poll revealed that 58% of employers don't offer 401k plans to their employees, and those who do offer 401k are seeing a shrinking participation rate. Just 14% of employees working in companies that made the plan available contributed to their plans in 2021, and that's according to the U.S. Census Bureau. 4. If you're thinking about getting a better job, don't get too excited. Most job openings are for low-paid positions. A large share of the jobs that have been created in recent years have been low-paying jobs, a new analysis shows. Right now, more than 1 out of every 4 job openings pays less than $10 an hour. While the middle class shrinks, the group known as the working poor continues to grow in the U.S. In fact, the United States actually has a higher percentage of workers doing low-wage work than any other major industrialized nation does. From the 1950s to 2020, the number of low-paying jobs rose by almost 54%. In the 80s, 28% of jobs were low-income jobs, and today, 44% of all jobs in America offer low wages. 5. Middle-class jobs continue to be shipped overseas. Working in the industry sector once enabled huge numbers of Americans to enjoy a middle-class lifestyle. But since the 1980s, we've lost 7.5 million middle-class jobs to foreign workers on the other side of the globe. That's because companies started increasing profitability by outsourcing our production to countries where workers are paid significantly less. Back in 1940, 25% of all American workers had manufacturing jobs. Today, only 8% of all American workers work in the industry sector. 6. American adults are living with their parents at unprecedented levels. A record number of Americans are back living with their parents, as the share of the U.S. population living in multi-generational households hit 18% in 2021, according to a new survey by Pew Research Center. In the past year alone, 58% of parents said they provided financial help to their adult children. This arrangement adds significant financial stress to aging parents trying to find their path to retirement. 7. On the flip side, more and more adults are leaving work or working part-time to take care of their aging parents. As our parents get older, they need more of our help, both physically and financially. That leaves working adults squeezed between providing financial support to their children and aging parents. This can dramatically impact one's ability to save for retirement. McKinsey research found that at least 43% of U.S. adults are unpaid caregivers right now. On top of that, more than 1 in 5 adults between the ages of 35 and 45, which accounts for 53 million people, have left their jobs to take care of a family member in the past 2 years, according to a new report from AARP and the National Alliance for Caregiving, NAC. 8. Retirees need good health care, and costs are shooting up. It's getting extremely expensive to stay healthy, and that's keeping many households from saving as much as they can for retirement. Data from the Bureau of Labor Statistics reveals that the average annual cost for health care for those 65 and older is $5,700, or $11,400 for a married couple. For adults trying to save for retirement, the average annual cost of health insurance in the USA is $7,739 for an individual and $22,221 for a family as of 2021, according to the Kaiser Family Foundation. Today, nearly 44% of U.S. adults aged 19 to 64 are inadequately insured. 9. Many of us arrive at old age with loads of mortgage debt. Around 10 million Americans aged 65 and older are still struggling with their mortgages. A Lending Tree survey shows that an average of nearly 19% of homeowners who are 65 and older are saddled with housing debt. In metro areas, that number jumps to 24.7%. Now, to make things worse, older homeowners' residences are worth an average of $15,626 less than homes owned by the general population. So, their main financial assets do not provide them with the same level of financial security. 10. Student loan debt can still be a problem in old age. The number of people aged 60 and older who have student loan debt has quadrupled over the last decade. That's according to the Consumer Financial Protection Bureau. Even though student loan debt is often portrayed as an issue holding back primarily younger generations financially, Americans aged 45 and up hold significantly higher balances than new grads on average, according to a new Credit Karma report. Researchers found that 23% of the 21 million people carrying student loan debt are over the age of 45, with an average outstanding balance of $47,000. Meanwhile, at the same time, new grads with student loan debt carry average balances of around $28,950. Moreover, some parents and grandparents take out loans to assist their children and grandchildren with college tuition, but According to AARP's Financial Innovation Frontier study, older workers who have been paying down student loan debt over the last 5 years have saved $182,000 less for retirement. 11. Our money is continuously losing money. American workers that try to pay by the rules find they're constantly fighting a losing battle. The hidden tax of inflation can be devastating to millions of middle-class families all over America. Since 1970, the US dollar has lost more than 83% of its value. This also means that any dollars that middle-class families try to save are constantly losing a little bit more value every single day. According to Pew Research estimates, over the past 40 years, the median wages earned by U.S. middle-income earners between the ages of 30 and 50 dropped by 27% after you account for inflation. 12. For some, their time in the U.S. middle class is running up. Thousands of middle-class families are set to fall out of the middle class in a few years. According to a shocking new study from the National Bureau of Economic Research, about 200,000 U.S. households will use the money from their tax refunds this year to pay for bankruptcy filing and legal fees. 13. The cost of living of a middle-class family is going through the roof. The highest consumer prices in 40 years are taking their toll on families, with 3/4 of middle-income Americans saying their earnings aren't enough to pay for their cost of living, according to a recent Primerica survey. Surging prices for everything from gasoline to groceries are eating away at family budgets, with 7 in 10 middle-income consumers saying they're cutting back on restaurants and takeout meals, while about the same share plan to skip upgrading their phones and other tech because of inflation. The share of middle-income Americans who say their incomes are not keeping up with their cost of living has jumped 16 percentage points since December 2020, rising to 75% in June, Primerica found. 14. Middle-income workers are drowning in debt. The middle class is burdened with a whole lot of debt, and it's been growing. But the typical American household now carries an average debt of $145,000. A separate Lending Tree survey uncovered that at the end of 2021, middle-income workers had $1.58 trillion in consumer credit debt. That is a massive $100 billion surge from the year prior. In June, 29% of middle-income Americans said their credit card debt had increased, and 43% noted that they expect to take on more debt in the next 6 months. 15. A shocking survey exposed that 40% of the American middle class face poverty in retirement. A recent study by the Schwartz Center for Economic Policy Analysis revealed that roughly 40% of Americans who are considered middle class, based on their income levels, will fall into poverty or near poverty by the time they reach age 65. The study also concluded that if workers aged 50 to 60 decide to retire at age 62, 8.5 million of them are projected to fall below twice the federal poverty level, with retirement incomes below $23,340 for singles and $31,260 for couples. Further, 2.6 million of those 8.5 million downwardly mobile workers and their spouses will have incomes below the poverty level, $11,670 for an individual and $15,730 for a two-person household. The risk of falling into poverty has been driven by depressed earnings, depressed asset values, and increased healthcare costs, which is making 74% of Americans plan to work past the traditional retirement age, the study says. In other words, even if you get to retire, you may not be able to stop working. A recent exposé published by The Guardian highlights that's the grim reality of a growing number of Americans who are forced to work into their senior years because they can't afford not to have a job. Estimates from the Bureau of Labor Statistics show that over the next decade, the number of workers aged 75 and older is expected to increase in the U.S. by 96.5%, with their labor force participation rate projected to rise from 8.9% in 2020 to 11.7% by 2030. Now, that's a rate that has steadily increased from 4.7% in 1996. By 2040, the U.S. population of adults aged 65 and older is expected to skyrocket to 80.8 million from 54.1 million in 2019. As the aging U.S. population grows, participation in retirement plans continues to decline. Nearly half of all families in the U.S. have no retirement savings at all, and inequality among Americans based on retirement savings is greater than income inequality. Over 15 million adults aged 65 and older are economically insecure, with incomes below 200% of the federal poverty line, the report reveals. I have no savings, no assets. I don't even own the home I've been renting for 15 years, says Dr. Lisa Natalie, 65, who still works as a chiropractor in Hawaii. There's no way I could afford to retire, she says. Similarly, Ted Newman of Columbus, Ohio, is a retired state government employee but still needs to work full-time to be able to make ends meet. He said, I have been working full-time for the last 8 years since retiring, and my wife also. Her yearly salary went almost completely to pay student debt, and I work to have extras for the home, said Newman. Our population is growing old, but their debt is not going anywhere. Over 9 million Americans aged 50 and older still have student debt, and the amount owed by this group is growing faster than any other age group. The report outlines that before the pandemic, 40,000 Americans had their Social Security retirement benefits garnished for student loans. Jane Switchenko, 63, of Massachusetts, said she and her 68-year-old husband cannot afford to retire because of the debt they took out for their children to attend college. My husband and I must work until we die, she says. Parent Plus loans take over $1,000 a month, every month. For a decade now, we continue to see a rising balance, said Switchenko. Not only can we not retire, we also cannot afford to fix our old house. We're desperate for new windows. We have a leaking chimney. We need new electrical work. She added, we work hard. We are frugal, but we're getting up there, but we've got nothing to look forward to because of these loans. We have 5 grandchildren and don't know what we'll be able to buy for Christmas. This has become the sad reality of what used to be the most prosperous economic group in America. They once could afford not only to live, but thrive and dream of a better future. But now they're trapped in a nightmare of collapsing living standards, rising prices, giant piles of debt. Thank you for watching this video.